The following program is sponsored by Adams Financial Concepts. Welcome to About Money, a different approach to investing you won't hear anywhere else. Your host, Mike Adams, is a registered investment advisor and works with investment portfolios exceeding over $100,000 in net worth and has a proven track record of managing long-term investments, surpassing the markets in the long term. The information shared on the following program is for educational purposes only, and any investment advice given may not be suitable for all investors. And now, here's Mike.
And we're going to be talking about money. We're going to be talking about the Money Show. The Money Show coming next weekend, June 15th and 16th. My guest today is one of the best-known gurus. He's been around for 50 years. You've seen him on TV. You've read about him in the Wall Street Journal and in Barron's and other media. He's very well known. He will be the keynote speaker. He will open the conference when it comes on the 15th of June. So you've got to hear about what he has to say. More about him later in the program. And I don't want to say too much because you just have to hear what he has to say. So the show is free. Just log into the Money Show Seattle and register. You know, I've been going to the Money Show now for about 6 or 7 years. This is the first year that I've been speaking, been asked to speak. Spoke in Orlando, spoke in Las Vegas a month ago. Today in Seattle. First time it's been in Seattle in many, many years. The overview of the whole thing is I'm not recommending any sessions or any workshops or any products or any presentations. I just want this to give you some information on what is available, what's going to happen. One of the keynote speakers is going to be Steve Forbes of Forbes magazines and media. He does a podcast on what's ahead. He's authored several books all about the economy and the dollar. And in 1996, 2000, he ran for president of the United States. He sought the Republican nomination. He's going to be here. He's going to be one of the keynote speakers. You want to hear what he has to say. Even if you disagree with any or all of what he has to say, it's worth hearing that. And on that point, I just want to make this point again. There are those who think that everything that Trump has done is right and everything Obama done has been wrong. And there are other people who think everything Trump has done is wrong and everything Obama did is right. You know, wherever you come down in the spectrum, the fact is, it's all about the numbers. It's all about the companies. It's all about performance and all about what's happening with the market. Doesn't come into play. And yes, presidents can have an impact. But what we're seeing is a market that's done well under both. So it's not about that. Take it at its value. When he talks about the market, it's not about whether he's Republican or Democrat. It's about the market. Same with each one of the speakers. And he is going to be talking about why the stock market will boom. I agree with his conclusions. We have different reasons, but we reach the same conclusions. It's based on the numbers. So again, think about the numbers and not about the opinions. You know, in stocks, coming up in this Money Show, I've never seen at any of the Money Shows I've been to the breadth and the number of sessions that we're seeing in Seattle. The breadth is enormous. Not just about stocks. There's going to be speakers and workshops about real estate, commercial real estate, and real estate investment trust. There are going to be people that talk about investing in agriculture, in U.S. agriculture, and even Paraguay agriculture. Paraguay's GDP is growing at 5%, one of the best in South America, and there's going to be a speaker who talks about investing in Paraguay and agriculture. Travel. There's going to be someone that talks about travel. You know, we've seen a disruption in travel over the last 20 years. It used to be you walk into the mall and see 5 or 6 travel agencies. Now you don't see any. Used to be on almost every street corner a travel agency. I can't remember the last time I've seen a travel agent. It's been a while, and I know I have, but not many. There's going to be one workshop on disruption in travel. And anytime there's disruption, there's always opportunity. There's going to be a workshop on investing in the desalination of water. A workshop on gold, investing in gold, what's going on in the gold market. I didn't see any on oil exploration. It's probably the first money show I've seen where there hasn't been anything on oil exploration and development. But there'll be other things similar to that. Precious metals. There'll be at least one workshop, maybe two, on investing in precious metals. There's going to be a workshop on cryptocurrencies. That one is coming up. And of course, one of the hot topics, cannabis, investing in the cannabis market. You know, I make jokes about it going up in smoke, but anyway, it's way beyond just smoking cannabis. It's medical, it's recreational, it's legal in the state of Washington and Colorado and other states as well. So anyway, those are going to be some of the hot topics, but those aren't the only ones. There's going to be options, and options is always a huge topic at the Money Show. Trading options themselves. Using option, there'll be another workshop. There'll be a couple actual workshops on trading options. There'll be one about using options to protect portfolio and to protect your portfolio against another great recession. I'm not a good options trader. I've said that in the program a multiple number of times. You know, for me, options are like chocolate-covered hand grenades, and maybe that's just me. But, you know, you can form your own opinion by listening to what the options traders have to say. They like it, and they sell the program. There's going to be people that talk about futures and commodities. I was, early in my career, licensed as a commodities broker. That's one thing, along with stocks and bonds. And as I said, I wasn't a very good options trader. I was even a worse commodities trader. So I'm not one to rely upon that, but you'll hear about trading futures. You'll hear about trading in currencies and in commodities. There'll be at least one workshop on pre-IPO companies. There are two pre-IPO biotech companies that are going to be presenting. There's one workshop talking about biotechnology. And you know, I've said it on the program a number of times. The 19th century was a century of chemistry. During the 1800s was the time of aluminum, of steel, of oil. The 20th century was the century of physics. Think about it, electronics, flight, all those things that came into play with physics, the internal combustion engine, all physics. The 21st century, I believe, is the century of biology. And I've talked a number of times on the program about the bioengineering. It's not just about biotechnology. It is about bioengineering. But right now, the opportunities are in biotechnology, and there will be a workshop on biotechnology. There'll be workshops on bonds and income. A couple very good workshops on bonds and doing dividends as income. There'll be some workshops on mutual funds. One of the workshops by Janet Brown, Fundex. I've talked about her on the show before and the studies they've done on Fundex. She'll be talking about impact investing. T.I. Kraft will be talking about diversification. You know, if you've been listening to the program a long time, you know that I deal with concentrated portfolios, not highly diversified portfolios. This is the opposite side of the story. It's worth listening to. And of course, stocks, my main emphasis along with bonds. Hirsch of Stock Traders Almanac, a second generation or third generation person coming along. The Stock Traders Almanac has been around for a long time. He'll be talking. Jim Stack, who is pretty bearish, he's been on the Money Show for 35 years. So he's been around a long time, especially talking about bear markets. There'll be a workshop on how to invest in defensive stocks. There'll be a workshop on global stocks and investing globally. I mentioned the bio stocks. And there'll be two types of investing in terms of stock markets. One is technical, and that's the story of price and volume. There'll be day trading, there'll be charting, there'll be market timing, there'll be models, there'll be momentum. More complicated than what I do. I'm a fundamentalist, and there'll be a few of us there talking more about my workshops and more about technical coming up. My fundamental approach is probably a pretty boring approach, but I think it does better. That's because I'm the one talking on the program and the technical people aren't, but that's okay. All to say, this show is going to be very broad and very deep. It's as broad and deep a money show as I've ever seen, and the show is free. All you have to do is log into the Seattle Money Show or the Money Show Seattle, register. It's free both Saturday and Sunday. Come hear the keynote speakers, come choose some workshops. You're going to be filled with huge tons of information. So that's all coming up. It's really worthwhile. I hope to see you there. Come to my workshops. I really, really would like you to come to my workshops. I'll be doing one on how will this bull market end. I'll be doing one on China. I will be doing one on superior stock returns and minimizing risk. I'll be doing two of those. So do come to the program. Do come to the show. I'll be coming right back. I've got a guest you want to hear. That's coming up right after the break.
More about money coming up with Mike Adams on AM 1590, The Answer. For more information, click on adamsfinancialconcepts.com. About Money continues. Remember the website, adamsfinancialconcepts.com. Here's Mike.
So welcome back to the program. My guest today is somebody that you really want to hear. He's recognized as one of Wall Street's most respected technical analysts. He's been doing this for a number of years. You've seen him on TV. You've read about him in Barron's. You've read about him on the Wall Street Journal. You've read about him in any number of places. He's worked for a number of firms. I first heard about him when he was with Prudential, but he was with Kidder. He's been with a Swiss firm, and I'm going to let him tell you a little bit about that when we get into it. So I want to introduce Ralph Acampora. Welcome to the program, Ralph.
Hi, Mike. Thanks for having me.
So why don't we start with a little bit of your background, and we'll talk a little bit about technical analysis. We'll talk a little bit about what you're going to be keynoting the Money Show with.
All right. I'll tell you how I got in the business. It was by accident, literally. I was in a very severe automobile accident. I'm lucky I'm alive, actually. I get hit. A trailer truck, 40 tons at 50 miles an hour, just took me out. And I wound up in a hospital, and my father's very dear friend, Bill Downey, would come and visit often, and I had spinal fusion, et cetera. This is 52 years ago. And whatever he was reading, he threw in the bed. And I was in a body cast. And I said, gee, I really enjoy reading this stuff. That was my first exposure to Wall Street. He was throwing in the Wall Street Journal into the magazine thing. He said, well, I'll get you a job. And they sent me to Wall Street, and they wouldn't hire me because I didn't have any fundamental background. I didn't have an MBA. And I saw an ad in the newspaper said, junior analysts wanted no experience necessary. And I was still on crutches, and I ran over to that. I said, man, that's my job. and the fella was afraid I was going to hit him over the head with my crutch. He said, all right, read this book and come in Monday. And the book was Technical Analysis of the Stock Market by Edwards and McGee. It was the Bible. That book changed my life. And I was lucky, so lucky to meet some wonderful people like Alan Shaw and Bob Farrell. And that was the beginning of something wonderful. I love it every day.
One of the great stories of turning a lemon into lemonade, right?
Yes, you got it.
So let's talk about technical analysis. For those listeners who don't understand what it is, go ahead and explain what technical analysis is.
Okay. Can I tell you the story of the most important date in modern technical analysis history? It's
Absolutely.
Friday, December 17th, 2004, when myself and a small band of technicians went in front of 20 SEC lawyers because we were fighting the Sarbanes-Oxley law came out. And Sarbanes-Oxley said that all of us, and I was an analyst at that time, have to take 2 new tests, Series 86 and 87. And 87 was new rules and regulations, no problem, but 86 said I had to have levels 1 or 2 of the CFA. And at that point, I'd been an analyst, a technical strategist for 40-plus years, and I said, darn it. I said, they don't accept what we're doing. So anyway, make a very long story short, we're in front of these people, and I had gotten up. I was the last 5-minute speaker, and I get up and I said, imagine if you lawyers were being mandated to take the medical. They're looking at me like I'm crazy. I said, well, that's what you're asking me to do. You asked me to, I have to have my CFA. I said, we have our CMT. This is our chartered exam. And with that, one of the lawyers runs up and he says, oh, Ralphie, we know you. We like you. We see you on television. He shoves a chart in my face. He says, what's factor on this chart? And I look at him. I said, oh, gosh, he's asking me a question. And I said, well, price is a fact. And his eyes went wide open. And I put my finger on his chest, and I was pounding on his chest. And I said, earnings are an estimate. You restate earnings. You never restate this chart. He said, darn good answer. I said, you better believe it. After it was over, 3 months later, the Securities Exchange Commission came out and said there are officially 2 analysts in Wall Street now. That was March of 2005. One's a fundamental analyst who follows companies and has a CFA. The second analyst is a technician who follows stocks and has a CMT. There's a huge difference between a company and its stock. And basically, people like me are looking at things like momentum. Oh, by the way, behavioral finance, that's a subject that only the good professors came out with maybe about 35 years ago. And Charlie Dow in his editorial wrote about fear and greed in 1885. So we technicians have been following sentiment and stuff like that. And, you really, people would think I would be very happy today when you turn on television and listen to all these talking heads, and they're talking about moving averages and Fibonacci, Liberace numbers and all this sort of stuff. And I say to myself, the viewing audience doesn't understand what they're talking about. And that's why we have to educate everybody. And, in this day and age of algorithmic trading, what do you think that's based on? Momentum.
Yes.
Moving averages. That's what we do. I'm not saying technical is better than fundamental. No. And for 47 years I've been teaching it. I call it fusion analysis. You start with the fundamentals, of course, but you time it, if you can, with the technical. That's it.
That's awesome.
Mm-hmm.
So give us a little preview of what you'll be talking about with your keynote.
Yeah. Well, I was in Boston this week giving a presentation to a bunch of people, and I, of course, have my, 20, 30 slides, whatever, and each chart was uglier than the next. I mean, they were all breaking down, and, last week was a disaster, head and shoulders. We're all seeing the same things. Moving averages are broken. And I get up in front of the people, and this was Tuesday, okay? And the presentation I was giving was at 2:30 in the afternoon, and I had been in and out of my hotel room, and I was glued to the TV and CNBC and watching the strength in that market for the last couple of days ago. I was very impressed. And I'm saying to myself, this is interesting. And then I saw a little note there that the Chinese are talking about, well, we should dialogue and we should have mutual respect. And I'm saying to myself, maybe this is cooling down, this tariff thing. The TV didn't make much comment of that. But what really impressed me with Thursday was that I think it was up like 450 points. And then the last 5-10 minutes, the market just exploded, and the Dow ended up up to, I think it was 511 or something like that at the close.
Yes.
And I was saying to myself, this really feels interesting. So I went down and I talked to everybody, and I was showing them all my slides, and I said, this is ugly, this is ugly, this is ugly. I'm giving you all the bad news, folks. And now for the good news. I think we made a near-term low. I think last Tuesday, this week, I think we're setting the stage for a tighter trading range instead of, and I was in the camp that, we had to have another leg down and maybe we test that December low and all that sort of stuff. I don't feel that way now. In fact, in the next couple of weeks, I think we're going to be in a trading, and I'm not naive enough to say that we're not going to have problems as we rally here. Of course, we have a lot of overhead supply that's been created in the months before where we are right now. And I'm sure we're going to run into some selling pressure there. But I just watch, mark my words, any kind of a pullback from here, I venture to say those levels are going to hold. That Tuesday level is going to hold. And in the process of holding, you're going to start to see some money come back into the market. So I left the audience in Boston saying that I'm not as negative as I was a couple of weeks ago. And I'm starting to think, I'm looking for reasons to maybe get in and become a little more active.
And you just shown...
Hopefully it's the same message when I'm in Seattle.
I hope so, too. You've just shown why you are considered one of the very, very best technical analysts. You know, a lot of that goes with experience, but a lot of it goes with insight and understanding.
Well, I've been doing it 52 years, and I got a lot of scars on my back, so I think I've seen a few of these before. And it does feel... I hate to use the word feel because I don't want it to make it sound like I'm not looking at the technicals or statistical stuff. There isn't that much evidence right now as we speak. But all I tell the listening audience is just watch what the market does in the next week or so. We're rallying here. As we speak, a lot of the downtrends in the Dow and the S&P that started in May of this year, it's only about a month and a half that those downtrends, I think, are being tested, if not broken, as we rally today. So it should be very, very interesting. Very interesting.
So I think you're going to have a very large turnout for your presentation, for your keynote. I think what you have to say has a lot of great information.
Well, I hope I can show the audience a little bit prettier pictures than what I had in Boston. They were ugly. Yeah, maybe I'll have some of those downtrends broken, and I can at least say this momentum has shifted a little bit.
And maybe we can drink champagne for that.
I'll take you up on that, absolutely.
Thanks, Ralph.
Thank you. Bye now.
Great to have you on the show.
All righty. Bye now.
So again, for the listeners, it's easy to sign up for The Money Show. Go log on. It's themoneyshow.com. Look for Seattle, the Seattle Money Show. Register. It's free. It's at the Hyatt Regency. It's going to be running all day Saturday, all day Sunday, the 15th and 16th of June. The 16th is Father's Day. And what better present than to bring your father or to have your children bring you? Or if you're a mother, it's good to come as well. Great day to be there. Lots going on. I started to cover what was going on in a lot of the workshops. It's as broad and varied a money show as I've ever seen. And I've been going for only about 6 years. It's been going for almost 35 years. But it's the broadest money show I've ever seen. So do log on, go to the Money Show, hear what Ralph has to say. He's going to lead off after the opening remarks. He's going to lead off with the keynote, and you just got a glimpse of what he has to say. He's got a lot more to say. He's going to be speaking for a good half hour. You're going to be able to ask some questions as well. He is among the very best technical analysts in the world. So hear what he has to say. He has all sorts of credentials you want to hear too. We're coming up to commercial break. We're going to come right back after the commercial break. I'm going to talk a little more about the Money Show and maybe talk about a couple of my sessions. I'd be remiss if I didn't talk about a few of my sessions. I will be talking 4 times during the Money Show. I do have 4 workshops. So come hear me as well. Please do. I'll be right back after this break.
More about money coming up with Mike Adams on AM 1590, The Answer. For more information, click on adamsfinancialconcepts.com. About Money continues. Remember the website, adamsfinancialconcepts.com. Here's Mike.
So I've been talking about the Money Show. You just heard my guest, Ralph Alcambora, one of the best known, one of the very best technical analysts. He's going to be keynoting. Steve Forbes is going to be keynoting. I have 4 workshops during the time, 3 different topics. I'm going to be talking about how does this secular bull market end? And if you've been listening to the program over the years, you know that I've been talking about this as one of the main themes. I talked about the super cycle as one of the themes. What underlies this secular bull market, the times in which world GDP has grown at a more rapid rate than average. It's grown. That first time period was 1870 to 1913, when it was driven by the industrialization of the United States. That second time period, 1945 to 1970, driven by the rebuilding of Europe, the decolonization. Of course, that was the time we were building the interstate highway system and airports. Third time began in 2009. It was a time in which Standard Chartered Bank of the UK, who did the study, said is going to be driven by those emerging nations. By 2030, 93% of the world's middle class will live in those emerging nations. If you look at the companies in the Standard & Poor's 500, the Standard & Poor's 500, all American firms, 40% of their revenues now come from international sales, 40%. And it's growing as a percentage. So American companies are taking advantage of the fact that we're seeing that growth worldwide. We'll continue to see that. So that's one of the themes I've been talking about. I've been talking about Dow 100,000. I believe we're on the way there. I can't tell you when. But the other theme is, how will it end? Because it will come to an end, probably. You know, it's not necessary that it comes to an end, but it's highly probabilistic that this secular bull market will come to an end. How will that happen? I'll be talking about 3 possible ways it can happen, but if you've been listening to the program over the years, you know that I think that the high probability is what I'll be talking about when we come to the workshop. So come hear me at the workshop, see me in person, see what I have to say. That's one of the workshops I'm doing. The second workshop is on China. How did it grow from being a very minor part of the world GDP, $92 billion out of it, $10 billion, anyway, I don't have my numbers right. Now I'm really wrong. How did it grow from being a very backward agricultural nation into the second largest economy in the world? Why did that happen? What was the model? And what's the impact going forward? You know, it's in a lot of the news because of the trade wars and because of the tariffs and because of the trade things going back and forth, intellectual property. All of that, talking about China, what's happened, why it's happened, and where are things going. So those are workshops that are coming up on Saturday. On Sunday, I will be doing 2 workshops that are the same. Both of those workshops are achieving superior stock returns with minimizing risk. It's a program that will be repeated twice. It will also be streamed. Had to cough. Sorry about that. Those workshops are going to be streamed because it is Father's Day. There are going to be people that think that it's more important to spend time with family than with me. I don't understand that maybe completely, but anyway, especially when I'm speaking, but you know, I do get it. I do. It's going to be streamed live. It's going to be streamed so you can review it either on Father's Day or for 6 months thereafter. I'm going to be talking about achieving superior returns. And as they say that, you know, I have over the past 10 years beaten the Standard & Poor's 500 by a couple percentage points. I have over the past 10 years taken a $100,000 portfolio and turned it into almost $500,000, a 5-fold increase. And that's my average client portfolio. When you go, you're going to hear a lot of claims about what people do. And it reminds me sometimes about the story about what happened with JCPenney. I got to tell you this, because what happened at JCPenney was their marketing model was always to have things on sale, to have things marked down. They would take a shirt, a $60 shirt. They would put up a sign that said the shirt was $100, it's marked down to $60. Or it was on sale for 40% off. People used to go into Penny's. They had a huge customer base that would go in and thought they were getting bargains and special deals. Because how do you know if a shirt is really worth $60 or $100 or $200 or $30? JCPenney put it up there. The shirt is $60, marked down to, or the shirt is a $100 shirt, marked down to $60. But in 2012, they hired Ron Johnson from Apple, and he wanted to come out with fair and accurate, fair and square prices. That's what he did. So instead of calling that shirt a $100 shirt marked down to $60, he put the price $60. And what do you think the customers of Penny's did? They quit buying. They went away. Same shirt, same price you could purchase it for, $60. But one shirt, one was labeled $100 marked down to $60. The other was marked fair price, $60. What happened to the customers? They went away. Was there any change in the product? No. Was there any change in the quality in that product? No. The only change was that you weren't getting what was considered a bargain. That was what happened with Penny's. It had a truly detrimental impact. So how does that apply to the Money Show? Well, you're going to hear a lot of things about the Money Show. And it's worth thinking and understanding what's being said. You're going to hear about models. This model. You're going to hear about individual trades. On this trade, I made 3 times what I invested, or 10 times what I invested. The thing is, I think I will be the only one at the show that actually posts a track record. And when you post a track record, you have to say past performance is no guarantee of future returns. I think I'm the only one that will have to say that in the whole show. And that track record includes every one of my stock clients, every single one. Not one is left out. And that track record, to generate that track record, we hired Morningstar. Third party, Morningstar, big into the mutual funds, big into tracking stocks. Morningstar goes directly to Interactive Brokers, our custodian, and takes the client data directly from Interactive Brokers. There's no interference. There's nothing in between. Morningstar then calculates the return for each and every client. They produce a report for each and every client. That's compiled into an average so that there's no advantage to big accounts or small accounts. There's no trades that are allocated to different accounts. A $100,000 account counts the same as a $1 million account. It's all put into an average, and that average then every quarter is calculated, and that produces the track record. It includes every single client that's been with Adams Financial Concepts for at least 1 quarter. Now, if you've only been there 2 weeks, it's not going to include those returns. But once you've been there for 1 full quarter, it includes all those. Some people have been with me since 1986. Their numbers are there. Some people were with me from 1991. Their numbers are there. Some people started with me in the 4th quarter of last year, 4th quarter of 2018. They now have a full quarter of data in the 1st quarter of 2019. Their data is there. All the accounts that were terminated, and the biggest termination for me is generally clients passing away. Their data is there. Those accounts that were terminated, all those accounts are there. And by the way, when people terminate, oftentimes I meet with the children, and the children look at the numbers and they decide to move their accounts in. They've seen what I've done for parents. That's different than the trend in the rest of the industry. Those are actual numbers. Not only are those actual numbers, that also, because I publish my numbers, that makes me one of the targets of regulators since Madoff. And Madoff published his numbers, and of course they were falsified. Since that, it's been a hot topic with regulators. If you publish your numbers, you get audited more often than others. And they come in and they look at the numbers. Now, they can't recommend, they can't say anything, but I can tell you that I have been audited every 4 or 5 years, and they come in and look at how that process goes and the accuracy of that report. And it's never changed. Anyway, as we go through this whole time period, you're going to see a lot of things which people claim to have performance, but ask them for their track record, actual client track record, and don't accept anything but actual track record. Anyway, coming to a commercial break. Don't go away. Do go sign up for the Money Show. Log in to Money Show Seattle. Sign up. The registration is free. It's at the Hyatt Regency. It will be a very informative and interesting time. Be right back after this commercial break to wrap up. Don't go away.
More about money coming up with Mike Adams on AM 1590, The Answer. For more information, click on adamsfinancialconcepts.com. About Money continues. Remember the website, adamsfinancialconcepts.com. Here's Mike.
So I've been talking a lot about what I do. I talk about the Money Show. I've been talking a lot about what I do. The Money Show. Do go in, log on. It's free. Register. Seattle Money Show. Money Show Seattle. Register. Do come June 15th and 16th. It's well worth the time. A very, very broad, diverse number of workshops covering almost everything. Broadest and greatest depth I've seen in the Money Show. Plus, if you've been listening to the program prior to this, you've heard Ralph Acampora, one of the most respected, one of the very best technical experts in the business, been there for a long time. You heard him speak on the radio program. He'll be the first keynote speaker. Steve Forbes will be the second keynote speaker. Lots of workshops. But I want to finish this section by talking a little bit, strategy. Will Rogers said, and this is a quote, Will Rogers said, "Don't gamble. Take all your savings and buy some good stock and hold it until it goes up and then sell it. If it don't go up, don't buy it." Let me say that again. Don't gamble. Take all your savings and buy some good stock and hold it until it goes up and then sell it. If it don't go up, don't buy it. Thinking about that, what perfect way to do it. I could build a model and then put on a workshop, a model where I could say, this is a model that's back tested. We only buy stocks that double every year. Think about it. They only double each year, and if they don't double each year, we don't buy them. And if you started with that kind of a model back in 2010, put in $100,000 in 2010, by 2018, that $100,000 would have grown to $12,800,000. Sounds big, huh? But think about it. If they only doubled, that means in 2010 that $100,000 went from $100,000 to $200,000. In 2011, it went from $200,000 to $400,000. And actually, if you look at the numbers, that's only through 2016. If you take it all the way out, you're talking about over $60 million by 2018. That's the kind of model that would be so perfect, and I could sell that so easily. I could put up charts and show you how it works. I could put it on a website and say, this is a back-tested model. This is the kind of return you can have using this model. It's back-tested, and it works like a charm. Just buy stocks that only double in price every year. And if they don't double in price, don't buy them. You know, and I know, that's fantasy. If you ask me for a client track record in that model, I couldn't produce one. And if I did produce one, it would be really haywire. I have been involved with a couple of people who build models, and I've watched how they do. And generally, back-tested models don't work out because we live in a dynamic stage. If we lived in a very stable stock market time, those models would work great and they would happen, but we don't. They change. So we're left with, in my process, that what I have to do every month is I have to look at 30 to 40 stocks, and from those, I will look at 8 or 9. I will look at the financials for 8 or 9, and then I'll drill down on 1 or 2. I'll look at the 10Ks and the 10Qs. I'll read those long, boring documents, and I'll look for certain things in those 10Ks and 10Qs. And then, looking 1 or 2 per month, I will only do 1 or 2 trades per year. That's how I do it. I'm looking for the type of stock that meets my criteria. My criteria is I want to see stocks that have the potential of increasing twice of what the risk is for decreasing. And I do look at the upside and I do look at the downside. I do look at what I think that they'll increase, and I do look at what I think they'll decrease. And I want to have at least twice the increase estimate as decrease estimate, the risk. And there's a reason for that. I'm a mathematician. I got my undergraduate degree in math, my master's in business. But with my math background, I'd heard that you have to be right 66% of the time to make money in the stock market. I thought about that a long time and thought, maybe not. Maybe if you buy 3 stocks, they're all $10. They have the potential of doubling in price, going from 10 to 20, or the risk of going from 10 to 5. So they have the potential of increasing twice as much as they decrease. If you buy 1 share of each of those $10 stocks, you're $30 out of pocket. And if 2 of the 3 fail, if 2 of the 3 go from 10 to 5, and 1 works out, goes from 10 to 20, you have 20 plus 5 is 30. So you start with $30, you end up with $30. You only have to be right a third of the time to break even, if you can do that. And I'm right about 50% of the time, so I'm not right 100% of the time. I wish I could do the Will Rogers thing of not buying stocks that go down, but I do. But by being right half the time and picking the right criteria for my stocks, I end up doing pretty well. But that's only part of the story. In a portfolio, because I'm a mathematician, I looked at what we call game theory, where you set up a game where you start with $100, you have 100 plays. Every time you win, you get twice your bet. Every time you lose your bet. And the odds are 50-50 of winning or losing. There's a couple ways to play. You can bet $1 each time. And when you bet $1 each time, you bet $1, you win, you get twice your bet, so now you have 102. You bet $1, you lose, you have 101 left. If you work that out 100 plays, the expected value is at the end of 100 plays, you'll have $150. You have essentially 50% increase. But there's another way to play, and that's to bet 10% of the portfolio, for example, a percentage. So now, with $100, you bet $10, you win, you now have 120. So you bet 10% of the 120, that's $12, and you lose, you end up with 108. If you work that out, it is 4,700 at the end of 100 plays. If you bet 25%, you end up with 36,000. But you know that it doesn't keep going up, because if you bet 100%, you're out of the game the first time. That's the second thing I do, is I build concentrated portfolios. There have now been a number of studies showing that concentrated portfolios outperform. So the third thing is that Sharpe received the Nobel Prize in 1972, showing there's no statistical significant difference between owning 8 or 9 stocks and owning 300 stocks. So my client portfolios generally are between 8 and 12 stocks, normally and usually closer to 8 or 9 than 12. That's That's how I construct portfolios. That's how I build the track record that I've built. I wish I could do it the Will Rogers way and only buy stocks that go up and never buy stocks that go down. But that's a fantasy land. It's not a model. It's real. It's justifiable. It's verifiable. And you can count on it. Anyway, that wraps up the program. Do go on the Money Show Seattle. It's coming up next weekend. Do go register. Come hear me. Come hear the rest of the speakers. Do the workshops. Take it all in. It should be a very fun time. And until then, I will be doing a broadcast on Saturday at the Money Show. So if you're not there, you'll get to listen to me on the radio. That wraps it up for today. I will be on the radio during the Money Show and the week after that as well. Have a great weekend and rest of the week. I hope to see you at the Hyatt Regency at the Money Show.
You've been listening to About Money with Mike Adams, a registered investment advisor. If you'd like more information about what you heard today, or about Mike's investment philosophy and strategy, or if you'd like Mike to evaluate your own portfolio, click on adamsfinancialconcepts.com. That's adamsfinancialconcepts.com. The information shared in the preceding program was for educational purposes only, and any investment advice given may not be suitable for all investors. Join us again next Saturday at noon for more About Money with Mike Adams here on AM 1590. The Answer. The preceding program was sponsored by Adams Financial Concepts.